Hi, I'm Jonathan Wild, and we are going to cover trading securities. Trading securities are debt investments that companies actively buy and sell to make a profit. These investments are reported as current assets on the balance sheet at their fair value. Let's jump right in with an example. So imagine a company opened this year and purchased several trading securities to buy and sell throughout the year. This collection or portfolio of securities had a total cost of $20,000. Now, by the end of the year, December 31st, the fair market value of this portfolio goes up to $23,000, resulting in a $3,000 gain. But because the company hasn't sold the portfolio of securities, we call these unrealized gains. The gains become realized when the securities are sold. However, we still need to record an adjusting entry for the $3,000 unrealized gain to record the portfolio's increased value. To do this, we record a debit to fair value adjustment trading and a credit to unrealized gain income. Because the company is in its first year of business, there is no existing balance in the fair value adjustment trading account. Therefore, we record the full $3,000 adjustment to the fair value adjustment trading account in the debit column. And similarly, $3,000 in the credit column. If there's an existing balance in future periods, we adjust accordingly. The fair value adjustment trading account is reported on the balance sheet and can either increase or decrease the reported value of the debt investment trading securities account. In our example, the $3,000 increases the value of the trading securities from its $20,000 cost to its fair value of $23,000. We can also alternatively report debt investments trading securities at the $23,000 fair value, noting the cost is $20,000. Now on the credit side, the unrealized gain of $3,000 is reported in the other revenues and gains section on the income statement. Now, let's fast forward a bit and say the company decides to sell some trading securities. These trading securities were originally purchased for $500 and are now sold for $650. This results in a realized gain of $150. It is realized because these securities are now actually sold. We record this entry with a debit to cash for $650, a credit to debt investments trading for $500, and a credit to gain on sale of debt investments for $150. The credit to debt investments trading removes the cost of those investments from the balance sheet. The gain on sale of debt investments is reported in the other revenues and gains section of the income statement. One last thing before I let you go. Any prior year fair value adjustments to the trading securities portfolio does not affect the calculation of the gain or loss on the sale of a trading security. Instead, changes in the fair value of trading securities will be accounted for in the period end fair value adjustment for the trading securities portfolio.